Hahn-Tech Premium Trading Tools, professional quality tools designed to sharpen your edges. Hi guys, welcome to the video. I'm really excited today to be announcing the release of our upgraded version of Divergence Lines Indicator. This is one of our most popular premium indicators on the Hahn-Tech website. The original version was released in 2016. Each time, those who have purchased the previous versions received the upgrade without any additional charge. And that's going to continue on with this upgrade. Anybody who has purchased a previous version of our Divergence Lines Indicators for Thinkorswim is going to receive the upgraded version without any additional charge. And boy, this is packed with new additional features. One of the most significant of which you see on the chart is that I've converted the Divergence Lines Indicator into a chart strategy that you can use for backtesting. And along with this, we are including, for no additional charge, a companion strategy that I created called Stops and Target Exits, which is a standalone chart strategy that handles exits for any chart strategy that you want to use for backtesting. It includes a profit target, it includes a stop loss level, and it also includes a trailing stop that is optional. And when you combine these two together on the chart, you're able then to optimize the various parameters regarding your risk-reward ratio and examining your win-loss rate to optimize your chart strategy to identify profitable edges in the market. And just a quick reminder that chart strategies on Thinkorswim are not able to automatically place live trades in the market. You must still manually place your trades and execute your trades and manage your trades on your own, but the chart will display the various levels and signals, and we will show you in this video how those signals play out on a live chart and how you would then trade those in a simulated or live environment. And we've also included a new watch list. Actually, there are two custom watch list columns that we're now including in this indicator package. So now you're going to have a chart strategy, a chart indicator, you're going to have an exit strategy, you're going to have two custom watch list columns that are color-coded showing trends and recent divergence signals, as well as the scan that was originally included with this indicator from the beginning. And not only that, but the indicator itself has received some very significant upgrades. There's a lot of new features that allow you to filter out divergence signals based upon overbought, oversold. And the indicator has the ability to plot the trend in colored bars or a colored moving average, depending on your settings. Let me turn that on for you real quick so you can take a look at it. And those colors are coordinated with the column that you see on the right. There's two columns here on the watch list. The one on the right is showing the different colors for the different trend stages. And you have also the ability to plot color legend that shows you each color and its meaning. So you've got max and min bullish, you've got min and max bearish, and in the middle you've got neutral. And there's additional plots that you can turn on to show you exactly how these trends are determined and measured from the price action itself. It's using the divergence patterns plus a mixture of swing pivots to determine the trend, basically support and resistance. It's based upon horizontal and vertical support and resistance. So I'm really excited to get started, so let's get going. And now I will take some time to cover the legal and moral obligations of any video containing material of this type, which is to clearly state that I am not a professional trader. I am not a certified financial advisor. Nothing in this video should be considered a recommendation or a solicitation to buy or sell any financial instrument. Trading involves risk, and that risk means that you may lose all or more than all of the money you have deposited in your broker's account. Along with that, I will also point out that with strategies, you have some additional declarations here, right here from Thinkorswim themselves. Okay, and I'll go ahead and blow that up a little bit so that you can see it clearly. The study parameters and data use historical market data and information gathered by TD Ameritrade. All output is for informational and educational use only, is not an investment recommendation or advice, and should not be relied upon in making the decision to buy or sell a security or pursue a particular investment strategy. Okay, it's very important. I know we have to cover those disclaimers and give you those warnings. And at the same time, we're making available these tools and showing you how to use these tools to identify edges in the market and setups that you might want to trade in the future. So please be very disciplined in your approach to backtesting. You want to make sure you do it carefully. You want to make sure you do it thoroughly. You want to make sure that you test everything on a simulated account before you start trading on a live account. And when you do move from simulated trading to a live trading environment, you want to do so with limited size. Those are all just basic guidelines for being smart about applying your knowledge in the markets to your trading. And I'll cap that off by reminding you that these are tools, and tools are inanimate objects. They lie on the bench until they are picked up. And if they are picked up and put into the hands of a skilled technician, then they can do marvelous things. But if they are picked up and put into the hands of an untrained individual, they can cause great damage and harm. So take this seriously, be intentional about your work, and understand that you need to take the time to learn how to use the tool properly and effectively. I know you guys are eager to get started and see what these babies can do, but I also wanted to mention that this video does serve as the full and complete user manual for these indicators. And this is not really designed to be sales and marketing. I'm not trying to make a sales pitch here. My goal in this video is to show you how to adjust the various settings in the indicators to get the behavior that you are seeking to match with your existing strategies or come up with your own. But I do understand that many people will be viewing this video also to determine whether they want to purchase these indicators. So I'm going to take a little bit of time here. I'm going to show you where to locate them on our website, and I'm going to show you what's included in the indicator toolbox, and then we can get into the details. So here we have the Hahn-Tech website, and if you go from any page on the website, if you go to the Premium Indicators menu and you select Thinkorswim Premium Trading Tools, you will arrive at this page. You can scroll down here and you can see all of our premium indicators that we currently have available. And I want to show you the one that is the subject of this particular video is the Standard Divergence Trend. And you can click on any of these screenshots here for any of these indicators to view an example. And there will be some drawings and comments on there explaining some of the features that are included. So you can see here that this is explaining there is a chart strategy included with it. And if you go to the next slide, you can see another example of this for short entries. And if you continue on, here's the RSI and stochastic version. Then we have a little explanation of the custom watch list columns. So you can view that to get an idea of what the columns indicate and how to read them and compare them to the chart. And then we also have a screenshot of the custom scan showing some scan results, and we've added the custom watch list columns to the results section of the scan here. You can do that on your own or you can leave them off. It's totally up to you, but this is just one example of how you can configure a scan layout. And we're going to be showing you each and every one of these components during this video. If you want to see current pricing, it's going to be always listed on this page. If you see a price that's something different than what's listed in this video right now, that's probably because there's been a price increase. About every January, I increase the prices. And then if you want to view the demo video, which is the video you're viewing now, you can always click this button here. And then if you wanted to place an order, this link right here will take you down to the order form. And here's the order form, and the subject of this particular video are these two packages right here. You got the Standard Divergence MACDX2 and the Standard Divergence RSI and Stochastic. We'll be covering the hidden divergence in a separate video so that we don't muddy things up and we can present detailed information about each of them. If you want then to go ahead and receive discounts, you can select your quantities. You can see here, for example, because I checked these two, we've got a discount of 10% off the subtotal, and that discount's automatically being calculated and displayed in the grand total here. And then when you're ready to place your order, you go ahead and check this box to agree to the privacy terms and conditions, and then you'll have a submit button. Okay, and also for the benefit of the folks who are viewing this video, in order to determine whether or not this indicator is a good choice for them personally, here's a set of questions I want you to keep in mind as you're watching this video. And the idea is that if you can answer yes to maybe 3 or more of these questions, then I would say this is probably an indicator package that is right for you. And I'll just review these really quickly. You don't have to give me the answers. This is a rhetorical question. So number 1, do I already use divergence signals as part of my trading setups? That's important. If you're not, then this indicator might not be the right choice for you. If you are, then which lower studies are you using for your divergence patterns? This particular video is covering MACD, RSI, or stochastic between the two versions that we have available on our website. We can build custom versions, so if you're using a lower study of some other type, like an awesome oscillator or a momentum study, or some of the other lower studies like a CCI, we can certainly build a custom version for you for a modest fee. Number 2, does my current trading setup attempt to identify turning points / trend reversals in the market? Really, in essence, that is what the divergence signals are all about. And if you go back to the chart here for a minute, you'll see that they don't always result in a reversal, but when they do finally work as a reversal, they work in a big way. You can see this one here starting to form a bottom over here on the right. You can see this double divergence here formed a very strong bottom and a big rally off of that. But there's opportunities to take a trade even if the divergence signal is broken. And I'll show you examples of that as we get into adjusting the settings. So number 3, do I typically identify trend direction using swing pivots within the price action? If you do, well, that's exactly how this particular divergence indicator is constructed. This indicator is actually looking at swing pivots in the price action and then comparing the lower study between swing pivots. So it's actually using swing pivots as its main core for determining the divergence patterns. Do I believe that backtesting my setups will help me be a better trader? Now, why is this question here? Because with this upgrade, we are including a chart strategy used for backtesting your signals. And so this gives you an opportunity, if you are interested in backtesting your setups and trying to refine your entries or your exits and trying to understand where the opportunities are in the market, then this tool was designed to be flexible and give you the opportunity to do that research for yourself. And the last question here, am I willing to put in the time and effort to perform exhaustive backtesting and analyze the results to find optimum parameters for my setups? Now, this is going to be a very small percentage of the viewership, I believe, because this is really grueling work. If you really perform backtesting correctly and you do it thoroughly, it's boring. It's like staring at spreadsheets or watching paint dry. It's not fun. So you've really got to have a hunger for this kind of thing. It's really got to be your thing in order for you to answer yes to number 5. But I would suggest that even if you don't answer yes to number 5, if you answer yes to 3 of any of the other questions, then you've probably found an indicator package that's going to help you in what you're currently doing in your trading. Okay, and let's go ahead and take a look at our agenda for this video. We have completed the overview, and we have also just completed this section right here, which is where to find the indicator package. And the next step in the video is we're going to be showing you installation and setup. This is something I've neglected to include in previous videos because I wanted to keep them short, but I want to make sure that everyone understands when they make a purchase exactly what they're going to be receiving in their email and how to apply each of these files that they receive onto their Thinkorswim platform so that they can get things set up and working just as you see in this demo video. So next, we're going to be looking at installation and setup. And for the installation and setup, I understand that most people these days are using Windows, so I will use the current version of Windows, which is Windows 11. To demonstrate the installation. For the Mac users, the installation is very much the same. If you know how to do it on a Windows environment, you most likely will be able to work it out without any issues on a Mac. Okay, so here is an email that contains the zip file, and the zip file contains a number of files, and we cannot import the zip file itself, so we have to download it and save it to our computer, and then we have to unpack it and import the individual files into Thinkorswim step by step. So I'm going to show that to you now. You just go ahead and click this. Depends on your email client. I'm using Yahoo Mail. If you're using Gmail or some other mail client, you're going to maybe have to right click and select download, or there may be a download arrow, as there is in this case. You got a little download arrow. So you'll have to work that part out on your own. I can't show every single example of every email client that's out there, but this one is going to show you the basic steps, and you can see the download has completed. Now we can open the file from here, but we don't want to do that. You can see I've got this window over here that shows the downloads folder for my Windows. This is the default download location for all files that's downloaded from the internet. And what we can do then is we can do a number of things. We can go ahead and extract all, which will extract all of them to a new folder within this folder. Or we can double click on this to open it, or we can right click and select open. So I'm going to just go ahead and do what I find easiest. I'm going to double click here, and it's going to open the folder to view its contents. You see there's a study file, there's 2 strategy files, and then there's some text files. Okay, so we have to import these study and strategy files into Thinkorswim, but we cannot do them while they are within this zipped folder. So I'm going to copy them. Okay, so I'm just highlighting all of them. I'm going to right click and select copy, and then I'm going to go back. Okay, now this is where we started, so this is the downloads folder. Okay, so I'm going to click on an empty space in the folder. I'm going to right click and select paste. That's that little button right here. Okay, I select paste, and now what I've done is I've taken those files that were contained within the compressed zip folder and I've pasted them into the downloads folder. So now these files will show up in Thinkorswim. The study file will show up in the study file section, and the strategy files will show up in the strategy files section. Okay, the text files are handled differently, and this is probably a really good time for me to explain our nomenclature. So we've got HT for Hahn-Tech and then a lowercase letter. Okay, HTA stands for analysis. Okay, that's just a regular study file. HTA is for analysis. HTB is for backtesting. So all of our strategies will have HTB as a prefix. Scans are HTS, so that's Hahn-Tech scan. And then the watch list columns are HTW. Okay, that's Hahn-Tech watch list. Okay, is what that stands for. Okay, so you can see you've got 2 watch list columns here. You got 1 custom scan. You got 2 strategies and a study file. Next, we're going to open up Thinkorswim, and I'm going to show you the steps required to import these into Thinkorswim and set up your custom watch list columns and custom scan. Okay, so I've logged into Thinkorswim. I'm going to move this off to the side. You don't necessarily have to do this when you do your import, but I'm doing it so that you can see these files over here on the left in the downloads folder and how they show up in Thinkorswim when we do the import. So the first thing we're going to do is we're going to import the study file. So we press the Flask icon to access the Edit Studies window, and you can open that Edit Studies window in whatever fashion is comfortable for you. There's about 4 different ways to do that. You can see there's 3 tabs up here: Studies, Strategies, and Sets. And so if we're going to import a study file, we must be on the Studies tab. We click the Import button, and then we have to navigate to the Downloads folder. In this particular case, it's not defaulting to the Downloads folder, so we have to navigate there. I'm going to go up 1 level by clicking this button, and then I'm going to locate the Downloads folder here, which is under the main username, and I'm going to double click on Downloads. And you can see our file shows up here. You see, that's why I showed it side by side, so you can see exactly where that file is showing up in Thinkorswim. Then we click open. You see that warning message up there? See, I've already got this installed on my system, so I'm not going to automatically override it. I'm going to select no, but that was exactly the right process. When you do this on your system, you won't get that pop-up message saying the file already exists. Okay, so we've just imported the study file. So now how do we locate it to add it to our chart? Well, all we do is we type H2A underscore, and that's going to get you to all of the Hahn-Tech analysis techniques that have been loaded on this account. And we can navigate here to the one that matches here, right? Standard Divergence MACDX2. Okay, we double click that and we hit apply, and okay, now it's been added to the chart. Now let's show you how to add the strategies. Now there's 2 strategies here, so I'm going to make sure I point them out to you. Remember, I said in order to import study files, you have to be on the Studies tab. In order to import strategies, you must be on the Strategies tab. So we're going to switch to the Strategies tab. We're going to click Import, and now you can see that it remembers our last location. So we're already here in the Downloads folder, and you can see these 2 strategy files match up with what's over here on the left. Okay. And what you've got here is the Standard Divergence MACDX2 version 4, as well as a brand new chart strategy that I created called Stops and Target Exits version 1. It's included with the Divergence package so that you have an exit strategy that you can use for testing and back testing various risk-reward ratios. So we just go ahead and click open, and then it goes ahead and imports those into Thinkorswim. These are already loaded on my platform, so I'm not going to click open. I'm going to click cancel, but you would click open. And then if you wanted to load those on your chart, then you just type in HTB _ and you can then go and find Standard Divergence MACD X2 version 4. Double click that to add that to the chart. Now, if we have applied the chart strategy, we no longer need the chart study because they plot exactly the same thing, except the strategy also plots your theoretical buys and sells. So I'm going to go ahead and remove the chart study that we added in an earlier step, and then I'm going to go ahead and include this one right here, the stops and targets exits. You see where that's located in our list of files in our downloads folder. So I'm going to go ahead and double click that and add that to the chart, and then I'll hit apply and OK. We still have a custom scan to install, and we have a couple of custom watch list columns. So I'm going to show those to you next. Okay, I've got the workspace prepped here. I just wanted to take care of some things that you don't really need to worry about so that we can focus on the important details. So I'm going to go ahead and open up this template scan that I have built, and that contains one study filter. I'm going to go ahead and click the edit button on that study filter, and then I'm going to go ahead and go to the ThinkScript editor, and I'm going to select all of this code right here and erase it. Now I'm going to go get the code for the scan, which is located in this file that I've already opened here, and all I'm going to do is select all. So you right click on that and select all. All of that code then has been selected, and then I'll go ahead and right click and select copy, and then we can then paste this into our code editor here. We'll go ahead and right click and select paste, and then we go ahead and click OK. And sorry that I had to move some things off the screen there. I had to make sure that the code itself was not disclosed because this is a premium indicator and it's copyright material, and we certainly don't want to publish it in a video. So now I've added the code to the scan, and you can see that if you open up the scan itself, you scroll down to the very bottom and it will contain the signals for running your two different scan signals. So let's go ahead and click the edit button, and at the top you can see there's some descriptions here, copyright notice, things like that. If you scroll down a little bit, you'll see all of the inputs. All these inputs are listed in the exact same order as they show up in the indicator. Okay, and what I'll do is during the process of showing you each of the settings, I will also show you how to update those same settings here within the scan editor. And down at the bottom, these are your signals. And if you're familiar with any of the custom scans that I have published on our website, you will notice that we have two different scan signals here. One is for any negative divergence and the other is for any positive divergence, and the way you switch between those is to simply place a hash mark here and remove the hash mark here, and what we've done is we've just switched it from this signal to this signal. Okay, so let's go ahead and cancel that so we don't save the changes, and now let's go ahead and show you how to add in the custom watch list columns. So I'm going to right click anywhere here. I'm going to select customize, and this is just a real handy little shortcut here. We can do it all on the same screen here. I'm going to go to custom quotes. You see how I've selected that? I hit the down arrow there, okay, and then I go to custom quotes, and that shows me all of my available custom quotes. Now I'm going to go ahead and grab a couple of custom ones that haven't been used yet. There we are. They've added to the bottom. I'm going to click and drag those up, and so our new custom columns will appear on our results list of our scan, and they'll appear on the far left. So I'm going to click OK, and then you can see those custom columns show up here. All right, we don't have anything there yet because we don't have anything in the results list. And so we have two different watch list columns. We have one that shows divergence count and the other one that shows the trend count. All right, and so we're going to add in the one that shows the count first. So we go ahead and right click here and we select edit formula and make sure it's set to daily time frame. And you can see that I've actually already got this loaded here, but I'm going to show you the steps anyway. Now if we go over here, down here to our list of open files, you can see this one here is the one for the count, and we just go ahead and select all and then right click and copy, and then we go over here and then we want to make sure we get rid of all the code here. Now there is no select all here, okay? You can't right click and select all, but there is a keyboard shortcut you can use on Windows. Control A selects everything on the screen, and then you can right click and select paste. and that basically overrides everything that's on the screen. Okay, and so there's nothing to view here, so we don't need to even bother looking at it, except I will explain that at the very top of the code are the same exact settings as you see on the scan. So once you learn how to adjust the settings on the scan, you will also know how to adjust the settings for the watch list columns, and the settings are exactly the same. So we'll go ahead and click apply and OK, and then the same thing we'll do for the other custom column we added to our list, and just right click over that column and then you select edit formula, and it's the same process here. You go down to your open files and find the one for the trend, the watch list trend, and you right click and select all, and then you right click and you copy, and then you go up to the code editor and you go ahead and press Control A, and then you can right click anywhere in the screen and select paste, and then you can click apply and OK, and that will give you your two custom columns. Now you can rename these columns. I've got video tutorials that show you how to work with watch list columns. I'm not going to bother showing you that level of detail here in this video. If you don't know how to work with custom watch list columns, you need to study up on it. You need to practice. We've got tons of resources on the Hahn-Tech website that will show you how to do that. But I will show you how to add these to a watch list. So let's open the side view, and then I'll go ahead and detach one of our watch list gadgets. So here we have a watch list gadget here, okay? And I'm going to set that to one of the watch lists that I want to display, and then I'll right click and select customize, and then I'll remove this, and then remember how we get to our custom quotes, right? So we get to our custom quotes, and there's our custom 01, custom 02. So even though we created those and added them to our results list of our custom scan, they're also available from any watch list gadget to be added as needed. So we'll click OK, and then you can see that the watch list now is loaded. Okay, that concludes the installation and setup. And if you complete all of these steps, then you'll be able to follow along with the rest of the examples in this video. And according to our agenda, the next step is to review the settings. And this is the section of the video that's going to feel a bit like drinking from a fire hydrant. So be prepared to have to view this section of the video multiple times so that you can absorb all of it. Don't try to rush through this part because you'll miss important details. There's a lot of settings in here. There were a lot of settings in the previous version, and we've added to it. So what I'm going to do is I'm going to use the chart strategy to demonstrate the settings, because the chart study has all of the same settings. The chart strategy has some additional settings that are directly tied to chart strategies. So it's going to be easier if we just go ahead and use the chart strategy as our example. Remember that there was a chart strategy called stops and target exits that was included with this divergence package. Well, I wanted to show you real quick where to locate the demo video for that. So if you go to the Hahn-Tech website and you find the premium indicators and select Thinkorswim Premium Trading Tools, you'll arrive at this page, and then you'll scroll all the way to the bottom of the list here, and this is the trailing stops and targets package. Now this package includes 5 separate exit strategies that you can use, and it's available separately. What we're including with the divergence indicator is one of those 5, and that's called stops and target exits. So if you want to learn how the stops and target exits works and how to adjust it and how to use it for optimizing your own setups, then you'll want to view this demo video. And for all of our demo videos, you will find a topical index. Let me show you an example. So here we have an example of a TradeStation premium indicator, and here is the topical index. So what we do for each of our demo videos, because they do serve as the user manual for these indicators, we'll go ahead and provide a list of topics so that you can see the different topics that are available, and you can jump straight to a specific topic of interest in case at some point in the future you need to freshen up your knowledge or understanding about various components or behaviors or settings. So you want to look for that in the video description. In the future, I'm going to try and put this more prominently near the top of the page that hosts our demo videos to make it easier to locate, but you want to look for that because it will save you some time. Okay, I'm going to go ahead and cancel here, and I've got another document prepared for the overview of the chart settings, and it's important that we review this because it will prepare you to absorb the information that we're going to show you as we demonstrate each of these settings, but we're going to go through this rather quickly so we keep the video from going too long. You can see in this column the MACD X2. And if you look at those file names, those should all look very familiar to you. We showed you those in the previous step, which was installation and setup. And so on the right, you will see RSI and stochastic. This is a list of files for the other standard divergence indicator that we sell. So there's two versions available. One covers the MACD X2, and X2 simply means that it uses both the value line of the MACD as well as the histogram of the MACD. I'll explain that when we get to the charts. And the RSI and stochastic is a different version of divergence study, but it does exactly the same thing except that it uses the RSI as well as the full K of the stochastic to measure divergence patterns. So just a very brief overview here. The indicators display divergence patterns with trend lines on the price graph, as you've already seen in the background. We have the option to show a trend direction and strength based on divergence structures. This is a brand new feature with this upgrade. And the trend direction can be shown in the form of paint bars or a multicolored moving average. I'll demonstrate both of those. Here is an explanation of what I already described to you. It measures divergence based on two separate lower study elements. So here you see it in print, okay? Double divergence is marked separately, and that is when the divergence pattern is detected for both of the lower study elements within the same price structure. You have a new ability here with this version. This is another upgrade feature. Filter divergence signals using overbought, oversold conditions. So you can adjust the overbought, oversold levels as well as choose from between the RSI or the stochastic. So in this case, even the MACD X2, which is measuring divergence patterns based on the MACD, it also includes an RSI and a stochastic component that you can use to select for divergence signals that are occurring in the overbought or oversold zones of those indicators. That's another big upgrade for this version. And of course we have the custom scan, which I showed you, and we have the custom watch list columns. This is a textual description of what those columns mean, so let's review those. We have the count, the bar count that shows green for positive divergence, red for negative divergence, and a value, a numeric value showing how many bars ago the divergence signal occurred. And then the trend direction with bar count. That column shows the color of the current trend and the number of consecutive bars the current trend has been in place. And then for the chart strategy, it has everything included in the chart strategy plus. It plots theoretical buys and sells, otherwise known as strategy orders, on the chart. The strategy orders are used for back testing and optimizing your trade setups. This is not meant for automated trading. It is impossible to use a chart strategy for automated trading. All of your trades must be manually entered. And of the strategy order entry types, this indicator includes confirmed positive divergence, confirmed negative divergence. You've got broken positive divergence and broken negative divergence. 3 and 4 are optional that you can turn on or off in the settings. The default is off, but you can turn those on, and we'll review those in the settings. Then you've got the intraday time frame options. So for intraday, you can adjust the trading hours, start and end time. So for instance, if you want to skip the first hour of the regular session, or if you want to include extended hours on your chart, but only backtest trades that occur during the regular session hours, you just set your start and end time accordingly. And it also has a built-in feature to flatten the position before the market closes or at a specified time, whichever it is that you select for that setting. And the idea behind that is that it allows you to backtest strategies that are closed before the session closes. In other words, they're not held overnight. But you can also turn that setting off so that you can backtest holding positions overnight if you would so desire. Then you have trade size. You can select trade size for shares or equity, and if you select shares, then you adjust the trade shares to the desired quantity and number of shares. If you select equity, then you adjust the account equity and the percent of equity to whatever it is that you want to use. In other words, it's not able to read your actual account equity. It doesn't keep track of profit and loss and build an account equity over time. It's a fixed value that you have to enter, and you get to adjust the value as well as the percent. Thinkorswim just simply does not provide any functionality that allows us to access that information. And with that, let's go ahead and dive straight into the charts. Okay, and as we review the settings, I'm going to just give you a little reminder that when we're looking at the settings. We're going to be using the chart strategy for the settings review, because the chart strategy contains all of the settings that are included with the chart study, plus some extra settings that are directly related to the chart strategy itself. So by reviewing the settings for the chart strategy, we will be reviewing all of the settings available for both. So go ahead and click the gear icon to access the settings. And before I start reviewing each of these settings, I want to go ahead and mark the ones on your screen here so that you can see which ones are specific only to the chart strategy. And everything below that, from this setting here, fast length, all the way down to the bottom, these are all common to both the chart strategy and the chart study. Okay, let's go ahead and review the first one, which is trade size type. So you can select shares or equity. When shares is selected, then this quantity here is the number of shares that are bought and sold on the strategy. So you can see over here, you've got histogram long entry with a 100 below that. That's the share size. So if we change that to 50 and hit OK and apply, then you'll see that those quantities change from 100 down to 50. So that's how that setting works. Now I'm going to go ahead and set that back to 100 so that we have the original state. These are all the default values, by the way, and so we're going to be examining each one of these from perspective of a brand new install. The other option you have here is equity, and with equity, the trade shares is ignored and account equity and percent of equity are applied. So in this particular case, you've got a default value of 10,000 for account equity. Percent of equity is set to 10%. So that gives you a grand total of $1,000. So what you end up with is the strategy trying to fit every trade within a $1,000 limit. So we'll go ahead and hit apply. And you can see this value down here is 8, because for $1,000 at that entry price, you can buy 8 shares. Over here, the price is a little higher. You can only fit 6 shares within that $1,000. So it only trades 6 shares. So you can see it changes from 6 to 7 as the prices go down. And that is how it's adapting to that setting. Okay, so I'll go ahead and put this back to shares, and then we want to look at this right here, trade direction. All right, right now it's set to long. You can set it to long, you can set it to short, or you can set it to both. So let's go ahead and set it to short, and along with that, we're going to have to make sure that we make the adjustment here on our exit strategy, because the divergence indicator itself does not have its own exits. So you'll need to adjust this setting as well. And again, we've got a demo video entirely dedicated to stops and target exits. So you can go ahead and review that. I showed you where to locate that earlier in the video, and that will show you how to adjust all of these other inputs for the stops and target exits. So you go ahead and make sure that you change that to short. Okay, so like for like. If you're long on one, you want to be long on the other. Okay, so now that we have both of these chart strategies set to short, both the entries as well as the exits, we hit apply, and then you can see that now we are taking a look at some short entries. So you've got short entries here, and the target and stop loss have been flipped around, inverted, and so now the strategy is set up to perform short entries and short exits. And then let's go ahead and take a look at the other option for that setting, which is both. So we have an option for long, short, or both. And when we set it to both, something peculiar happens with this chart strategy that you need to be aware of. So I hope everyone's paying attention. I'm going to click OK, and I'm going to remove the stops and target exits. Why? Because when the divergence indicator chart strategy is set to both, then what happens is the strategy reverts to a stop and reverse type of trading. It's easier to explain if I go ahead and hit apply and show you on the chart. Okay, so what's happened here is that there is a short entry over here, so minus 100 shares way over here. There's a divergence signal barely visible on the side of the chart, and then it stays short until it gets the first long signal, which is this histogram positive divergence signal right here, in which it goes long. Okay, and then it stays long until the very next short signal. So it's a stop and reverse, meaning it's always in a position. It's either long or short. When it gets a new signal, it simply closes out the previous position and initiates a new one in the opposite direction. Obviously, on a daily chart of Apple, this is not going to be profitable based upon looking at the profit and loss graph on the bottom, but there may be some circumstances in which this type of behavior is going to be profitable It's up to you to perform your own back testing and your own research to determine where and if that is applicable to your specific goals for trading. Again, this is a tool. I've tried to build it with as many options as possible without pushing you into analysis paralysis. So let's go ahead and flip that back around to the long side for the rest of our settings. We'll go ahead and switch that to long, and I'll go ahead and add in the stops and targets exit strategy to handle the long exits. They're both set to long only. We'll hit apply, and now we're back to our original state. So we'll go ahead and look at the next setting, trade broken divergence. Now what I want to do here is I want to point out some areas of the chart in which a broken divergence is going to appear when I turn this setting on. Okay, so I've marked those on the chart, and what I want you to do is pay close attention to that area that I've marked on the chart, and I'm going to go ahead and turn that on. Okay, trade broken divergence, and then as soon as those appear, then I'll explain what is broken divergence. So here we are right here. I'll just go ahead and zoom in so that we can focus on those. So broken negative divergence. So right here you had a negative divergence signal, okay? And it would have been for a short. It would have been for a short entry. But the strategy is set for long only. And so what happens is when a divergence signal is broken, you may find by looking at the charts that very frequently these divergence patterns are broken. Well, what that means is you've broken through a level of resistance. Okay, that previous negative divergence actually created a level of resistance. And once the prices are able to break through, then it does tend to continue on. And so that's why I've enabled this feature that you can turn on. It's disabled by default. It's up to you to determine when it's applicable and effective for your own trading goals. But this is how it works. So you've got this arrow right here indicates a negative divergence, which would normally be a short signal, but we're only trading long. I know I'm repeating myself. This is important though. And then as soon as we trade and close above that resistance level, the broken negative divergence is able to plot a order there and back test that particular setup. Okay, this is something that's been present all along in the divergence indicators since I first created them, but I'm not sure that people who have been purchasing this indicator are aware that sometimes a failed divergence signal is an opportunity. It doesn't mean it failed, it means that's an opportunity for taking a trade in the other direction. And this broken divergence will also work on the short side, and I should probably show you an example of that as well. Go ahead and reset the chart, and then let's set things up for a short side. Again, the trade broken divergence remains on. I've only changed the trade direction from long to short. I also need to update the stops and targets so that it is also short. And then I'll hit apply and OK. And then I'll point out this one probably over here is probably the easiest one to point out. So what you have here, you see this arrow right here? That is a positive divergence, which would normally be a long entry signal. But because we are in a short only condition and we have enabled broken divergence, this broken positive divergence is able to create an entry right here. Now this one didn't work out. The price backed out into your stop loss order, but if you had a wider stop, clearly you can see that there was an opportunity here for a profit. It just depends on how you have things set up. So this is part of back testing. You got to test things out, and then you got to prove them in a live market or a simulated live market. There's a couple of other broken divergence signals for the short side. Okay, so we'll go ahead and reset that chart. I'll bring this whole thing back to a long condition, and I'm going to leave on the trade broken divergence going forward because that will help you guys to see the full functionality of that and learn about it over time. And it also is important because the very next setting you can see here, broken within bars, I'm going to explain that next. So let me just go ahead and set everything up back for the long side. Okay, so now everything's back to long, and this is long only, but we are including broken negative divergence. And now I want to zoom in on these signals again, just like I did previously, but I want to move them all the way to the right side of the chart so I've got room to show you the settings. And so we're going to take a look at this setting right here, broken within bars. Default value is 5. And I want to draw your attention to the chart though. I want you to look at this first broken divergence signal and I want to help you learn how to count the bars, because the divergence signal itself is here on this bar, but that divergence signal is not locked in until this bar closes. So the way this is counted, this bar is bar 0, because that is the first bar that confirms negative divergence. If this bar closes above that high, then the negative divergence is completely wiped out and erased. It doesn't exist. Okay, that's why this bar is bar 0. That makes this bar bar 1. Okay, so let's look at the second one. Okay, this being the negative divergence, the bar that locks it in is this bar that follows it, so that's bar 0. Then we have bar 1 and bar 2. Okay, so the first signal is breaking on bar 1 and the second signal is breaking on bar 2. And the way the setting works is broken within bars. So if we say within 2 bars, okay, we would expect both of these signals to remain just as they are. And now if we back that out one more down to a value of 1, now the second broken divergence signal disappears because it was not within 1 bar of the confirmed signal of the divergence. But this bar is still showing a broken divergence because this is bar 1. And you can't go below 1 on this setting because a value of 0 is meaningless, because a value of 0 is the bar that confirms the divergence in the first place. And you can never have a broken divergence on the bar that confirms the divergence signal. Okay, let's go ahead and take a look at an example on the short side just to reinforce this so that you guys understand how that setting works. And you can see I have the chart set up for short side now for both the entries and exits, and I've readjusted the setting to the default value of 5, and you can see that there is a broken divergence signal over here towards the right. Let me go ahead and zoom in on that specific section of the chart so that we can focus on that. Move this over a little bit here. There we go. So now what do we have here? We have, this is the divergence signal. Then we have bar 0, which is the confirming bar that follows the divergence signal. So that's bar 0. Then we have 1, 2, 3, 4. So this broken divergence is appearing on bar number 4. Okay, it's within 5, so it's allowed. Let's see what happens when we adjust the setting. If we adjust the setting down to 4, we expect that that signal will remain, and it does. Now if we adjust it down to 3, this is when we would expect it to disappear. And it does. Okay, if you're still a little foggy on that, then go back and review this section of the video. Okay, I'm going to restore the charts back to the long side, and then we're going to start reviewing the next setting. Okay, and I've updated the chart to the long side, and I've also updated the time frame on the chart. It is now a 5-minute chart of Apple, and I'm going to go ahead and move this chart a little bit over to the right here. And let's go ahead and open up the settings, and you'll see why I changed it to an intraday time frame, because the next group of settings has to do with the trading hours. So we have the ability to apply trading hours. Default is no. You have intraday trading start, intraday trading end, and you have intraday flat time. So you have 3 different times to adjust. The start and end times relate to new entries, not exits, but new entries. So you have the ability to restrict the entry signals during backtesting to occur only within a specified period of time. And you also have the ability for an intraday flat time. The default is 1545. If you want to turn it off, you change that setting to 0. But let's go ahead and turn this on, apply trading hours. Notice that even before we apply trading hours, the intraday flat time is still active, right? It's right here on the chart. You see that? Timeout LX, timeout LX. So it's closing the position before the close of market each day at 1545. Okay, this is for backtesting purposes. Now we'll go ahead and click yes for turning on trading hours, and then notice what is our start time. Intraday trading start is 10 o'clock and the end is about 3 p.m. Now that should not impact this section of the chart here, which is Monday. But if you look at the next day, Tuesday, you see you've got a long entry that occurs very shortly after the open. It is certainly earlier than 10 a.m. So if we go ahead and apply trading hours, which is now set to yes, I've just changed that, and now we apply that, we would expect this broken negative divergence that occurs right around, well, between 9:30 and 10 a.m., we expect that to disappear. There we go. So that signal that was right here on this candle right here has now been removed because it's not within the allowed trading hours. And now instead, the strategy is able to take another broken negative divergence signal that occurs within the trading hours. And again, we set it between 10 and 1500 hours. Let's go ahead and close the settings here so I can zero in on this really closely. Let's just look at these couple days right here. And then I want to hover the mouse over. This is the candle that showed the broken divergence. Okay, and you see the timestamp down at the bottom, it's 9:45. So it's just before the start of our allowed trading hours, which is 10 a.m. The signal would have to occur between 10 a.m. and 1500 hours, which is over here. Okay, that's the only period during which entries are allowed with these settings. And so now I want to take a look at this one right here in the very end. You see this? That entry order is at 1430. And it's just within the allowable trading hours, which ends at 1500 hours. So let's see what happens if we change the intraday trading end from 1500 hours down to 1400 hours. Okay, this would allow new entries only between the hours of 10 a.m. and 2 p.m., in which case we would expect this signal right here to disappear because it's outside of those trading hours. So let's click apply, and sure enough, it disappears. So you can see how both the start time and the end time are impacting the allowable trading entries, and it only affects new entries. It does not affect exits. Okay, now let's go ahead and reset this chart, and I want to show you the next setting, which is the timeout. So we've got a couple of those here on the chart so that you can see them. And let me go to the settings here, and I'll show you how to turn off the timeout. So right now, the intraday flat time is 1545, right? So this bar right here where you see the timeout LX in yellow, okay, that is occurring on the 1545 bar. And so if we reduce that down to 1530, we expect that timeout LX to move to the 1530 bar. So let's hit apply, and you can see how that has changed. Now it's moved backwards a little bit. And we can go ahead and do that again. We can change that setting to 1515. Okay, move it back a little bit further. There you go. So now you've got it set up to close right at 1515. And how do you turn it off entirely? Let's say you wanted to turn it off. Let's go ahead and open up the view of the chart so that we can see everything that's on the chart. And then I'll go ahead and update this setting and show you how to turn it off. In order to turn this off, intraday flat time gets set to 0. Set it to a value of 0, and the intraday flat time will cease to function for backtesting purposes, right? So let's hit apply. And we can see that we have the timeout LX still shows up. Why is that? Well, we have the stops and targets exits. Okay, that one also has a timeout. So there's a timeout here, so it's actually reverting back to this, right? So you need to be aware of all of the different chart strategies that you have added to your chart and different settings which might be impacting how your exits are handled. So we'll go ahead and set this one to 0 as well. And now that both of them are set to 0, we should have no chart strategies trying to exit before the market close. There we go. Now you can see positions that are being implemented here and held over several days, and finally hitting a target here, and then this one holding overnight and hitting a stop loss here. And that is how you turn that setting on or off. And again, just to review, you have to remember to set that up for both of your chart strategies, okay? Because the stops and target exits also contains a timeout element as well. Okay, so 1545, I'll set both of those back as they were. And again, if you have any questions whatsoever about how to use the stops and target exits, I've already mentioned it earlier in the video. You can go to our website, you can get the demo video, and you can get all the details on how to adjust all of its settings. Okay, we can move back to a daily chart because now we're going to be reviewing settings that have nothing to do with the chart strategy itself, except it will impact the performance of the backtesting, because as you change these settings, you will be changing the behavior of the divergence patterns. You can change the MACD properties and a whole host of other settings that are listed here. And we're going to try and move through these pretty quickly because the video is getting long already, isn't it? Okay, I've updated the chart here. We've got a daily chart. The strategies are set for long entries and exits. I've got a MACD histogram and MACD value line showing on the lower subgraph. Just so you know, the value line of the MACD is the bright blue line here. That's the default color. And those are the two elements, the histogram and the bright blue line. Those are the two elements that are being used for this divergence indicator, which is the MACD-X2. Another element that I will introduce at this section of the video is our custom watch list columns, because you will need to understand how to adjust the settings manually in the code for the custom watch list columns, and those settings are going to be identical to those that show up in the scan. So if I show you here on the chart and in a custom watch list column, you'll also understand how to adjust your scans. So you have to adjust your settings and make sure everything is matched up across the board in order to avoid getting confused. So let's move that off to the side for a minute. And we have now the default values for the MACD. It's a 12/26/9 exponential, and that is exactly the same settings that are used as defaults for the chart strategy. So let's go ahead and update the MACD first. And I'm not going to make any major changes here. I'm just going to make some subtle adjustments. And the idea is just so that you can see that if you make these changes on the MACD and how it displays, it does not impact the chart strategy until you update the chart strategy. So what have I done? I've updated the MACD to 10/21/8 with a simple moving average. So what does that do when we change the chart strategy? So we'll go to the chart strategy settings. I'll go ahead and scroll down here until the fast length is right here at the top. So we'll make those same changes. Okay, now the chart strategy is going to match the same settings used on the MACD down in the bottom. Okay, and so you can see how it's changed. It looks like the P&L graph has improved slightly. So you can see now that among all the other settings that you get to adjust, you also have many settings that you can adjust to change the behavior of the divergence signals themselves, which will then percolate throughout the rest of the indicator. Let's go ahead and show you how to do that on the custom watch list. We'll go ahead and right click on that and select Edit Formula, and you can see that the list of inputs are listed in exactly the same. And so what you would do is you would manually enter the values here. And unfortunately, with custom watch list columns, we really don't have any simple way to do this. I'm sorry, but this is the way it is. You actually have to type in average type.simple. Okay, you actually have to type that in. I'm sorry about this, but that's the way it is with watch lists and scans. You have to manually update the code in order. Oh, and I just noticed I screwed up that setting here. Let me set that back to 8. Okay, and wait till we get to this one. You're going to have to really bear with me when we get to these that have options, you know, the drop downs. I'll show you how to do that though. Don't panic. Not going to be as simple as working with the chart strategy through the Edit Studies window, but you're going to understand how to keep everything lined up. So hit apply and OK, and now the custom watch list column is in line with what we see from the chart strategy. You know, I'm going to jump ahead here. I'm going to turn on a specific setting on the chart strategy so that we can see the trends and match them up with the watch list column. Okay, I'm just going to turn this on. I'll review it when we get there. And so now we've got the same colors on the chart as we do on the watch list. So you got 17 bars of yellow. That's what that is right there. Okay, 17 bars of yellow. And then you've got for Apple, this is what I'm looking at right here, Apple. And then you've got 9 bars since the last positive divergence. That's how to read the custom watch list column. Okay, so let's go ahead and move that off there. And sorry to jump ahead like that, but I will go ahead and review those settings later on as we get to them. Now let's go ahead and set everything back to the way it was and get to the next setting. So we're done adjusting the MACD. I think I can remove that from the chart, and I've set everything back to the default values here. And let's go ahead and scroll down and examine the next setting, which is this setting right here, swing pivot price. And what that tells you is for the swing pivot structures, are we using the highs and lows of each bar, or are we using the close? And it's a very subtle difference. I'll let you experiment on your own, but it's simply looking at each individual candle, and you have the selection of either using the high and the low for defining the swing pivot structure itself, or the close. The changes are very subtle. I'll go ahead and apply that. There's very little difference there. I'll go ahead and hit OK there, and then I'll show you how to do that on the custom watch list column. We'll go ahead and edit the code there for that. And you can see right here, at default, you see the word default. We're just going to remove that entirely. It's going to create an error. And then you're going to type in the word default. You could cut and paste if you want. So that's how you change that setting. So the swing pivot price, you change it from high to low to close by moving the word default You see, the placement of the word default within the brackets is telling the code which of these two settings to use for the custom watch list, and it works the same with the scans. So we hit apply and OK, and then it will update. And you can see now, because of the changes that we've made, we've got 24 bars of red, and we have not updated this column, so it's still showing 9 bars since the last divergence signal. So if we wanted to update that too, we go ahead over here and update the other column. This is column 1 now, and we do the same thing, right? I'm just going to hit Control X and Control V, and that will go ahead and place that in its correct location. We hit apply and OK, and now you can see that the number of bars since the last divergence signal is lining up with what you see on the chart. Okay, so now we'll go to Studies, Edit Studies, and then we'll adjust the other one. Previously we adjusted the swing pivot price, and I told you that has to do with how the code is defining the structures of the swing pivots themselves using either the high and low of each bar or the close. And then you have also the ability to adjust which price of each candle is used when comparing your values to try to determine whether you have positive or negative divergence. So with the high and low, it's using the low of the bar. In the case of positive divergence, is using the high of the bar in the case of negative divergence. If you change it to close, then it will use the closing price of each candle for the comparison of the divergence pattern itself. So we'll hit OK and apply, and I'll show you how to update that on the watch list. Let's do the first one. And again, it's just the same thing. I'm going to use Control X and click over here and Control V. Those are just some keyboard shortcuts to make that easy, so you don't have to try and type things out. Hit apply and OK, and then we'll do the same thing with this one. And again, I apologize that this is so labor intensive, but this is the best we have with Thinkorswim. We don't have the ability to really adjust these through a user interface. So everything is updated and matching up with what's on the chart, right? Good. So let's go ahead and move on to the next setting. I'm going to leave those just the way they are so I don't have to keep updating the code in the custom watch list columns. So just remember that we've got the swing pivot price and the divergence price are now set to close instead of high and low. I may revert everything back to default values later on in the video, but right now I want to examine this very important setting called look back bars. Now this is something that is maybe a little bit difficult for people to comprehend, but I think I've come up with a very effective way of explaining how the look back bars is impacting the behavior of the chart study. And I decided to clean things up on the chart a little bit to make things easier to see, so I've removed the paint bar trends for now, and I have reset all of the settings to default except for the broken divergence. I've allowed that to stay on, and the idea now is that we can see the candles a little bit more clearly. I'm going to zoom in on this section of the chart right here, and I want you to notice that this divergence signal right here is a double negative divergence. That means it's showing negative divergence on both the histogram of the MACD as well as the value line of the MACD. And you notice that we also have a couple of more pivots here, potential pivots that might be able to generate a divergence signal, but only if the indicator is set to reach back far enough to reach those two bars. And I've prepared the screenshot that will help to demonstrate the impact of this setting. So right now the default setting for the look back bars is 8. You can notice here this trend line consists of 6 bars. And so it only goes back 8 bars. That means it will not be able to pick up this one that is 13 bars away, nor will it be able to pick up this one which is 16 bars away. So keep this image in mind. It is the exact same section of the chart as we're working on. I've just added some trend lines here and took a snapshot of it so that you can see it clearly. And now we'll go back to the chart. I'm going to readjust the zoom here so that we have those signals a little bit more to the right. There we go. So now it's that same structure, okay? That's 6 bars away, that's 13 bars away, and that's 16 bars away. Got it? And then we're going to go ahead and open up the settings and adjust the look back bars and watch how the signals change. So we'll scroll down here until we get to the look back bars. Okay, set to 8 right now. And if we want to pick up this one, we've got to have at least 13. Okay, if we want to pick up this bar instead of this one. So then we'll go ahead and adjust this. Let's make it 14 just to make sure that we encapsulate that one. Now also keep in mind that in order for it to pick this up, not only does the look back bars have to be set long enough to be able to stretch, okay, across that distance. But there also has to be legitimate divergence pattern here. You could adjust the setting to that period, and if there is no divergence between those 2 points, then it simply won't plot it anyway. But the look-back bars will at least give it a chance to say, hey, is there a divergence signal within this longer span or shorter span, depending on your look-back bars. Okay, so let's go ahead and hit OK and then apply. And maybe I overshot that a little bit because now we're stretching all the way out to this one here. Okay, so let me go ahead and drop that back down a notch. Okay, and what I have done is I have tried every value from 14 down to a value of 9, and what we discover is that there is no divergence between this point and this point, but there is divergence between this point and this point. Okay, in order for it to pick up that longer term divergence pattern, we have to increase the value of the look-back bars. And along with that, I will also explain this section of the chart right here. The look-back bars setting is not going to have any impact whatsoever on any of these signals. Why? Because these signals are continuing higher and higher and higher. In other words, you would need to have like a pivot here and a pivot here. You see these two right here? So in other words, in order for the look-back bars period to have any impact whatsoever, there needs to be another peak, in between. You notice here there are no peaks. It's basically hitting every single peak up along the way in this trend. And so let's go ahead and try this. I haven't really tested this beforehand, so you're going to see it as I'm doing it. And let's bump that out to 15 to see if we can pick up this little section right here. No. So what that tells me is that this section from here to here is only 11 bars, and our look-back bars input is set to 15, and it's still not picking up any divergence between these 2 points. That simply means there is no divergence pattern detected between those 2 points. Okay, so I hope that additional clarification also helps. I know over the years since we originally created this indicator, I've received lots of questions on this, and I see a lot of people still struggling with trying to comprehend how that setting impacts the behavior of the chart. So let me go ahead and check that back to the way it was. Notice that coming up here, we've got some overbought, oversold, and we've got some RSI and stochastic inputs. So that's a new feature that we've built into this new upgraded version of Divergence Indicator, and we're going to get into that pretty quick. So stay tuned and maybe even grab a cup of coffee. Keep your mind sharp because we've got some really important details to reveal next. Oh, and let's make sure we show you how to adjust this in the settings for the watch list columns as well as the scan. Again, as I said, the scan and the watch list column settings are identical, and you adjust them in the same way. Here is the setting that we just examined on the charts, and so here is where you would adjust that value, and you just type in whichever value it is that you want to use here, and make sure that this value here matches what you have selected for your chart so that your watch lists and your charts are in sync. I'm going to cancel because I didn't save any changes there. And let's go ahead and move on to the next setting. Okay, and the next chart setting is named Alert on Close, and that is a setting that controls the alerts. So if you go ahead and look at that setting, it's right here, Alert on Close. The default value is yes. When it's set to yes, it forces the confirmation bar to fully close before the divergence alert is triggered. And where are the alerts? The alerts are shown down here, and you can expand this little section here. They're available on the chart strategy as well as the chart study, and they're exactly the same. And you've got alerts 1 through 6, and you can adjust these as needed. But what can't be adjusted from here is the behavior that this setting addresses, which is alert on close, yes or no. Let me go ahead and go back to the chart, and I'll explain what that means. I'll zoom in on one of these signals here. And so here, let's just pick this arrow right here, this yellow arrow right here. What will happen during a live chart is as soon as this bar appears and the high of this confirmation bar remains lower than the high of the previous bar, and as long as the confirming bar is active, okay, that signal isn't locked in. So alert on close will wait until the confirmation bar is closed before triggering the alert. So in this case, on a daily chart, the alert would be triggered at the open of this bar. Now if you change that setting to alert on close equals no, turning that setting off, then it does not require the confirmation bar to close before the alert sounds, which means that as soon as the confirmation bar opens and this arrow appears, the alert will be triggered. But in that case, that signal is still subject to change and can be erased from the chart if prices on the confirmation bar continue trading higher up and through the high of the previous bar. In that case, it would negate the divergence pattern there and it would disappear from the screen. So the net effect of this setting is that alert on close waits until the signal is locked in to trigger the alert, and if you set it to no, then it's going to give you a heads up, hey, you've got a signal that may be developing, it's not locked in yet, but at least you're getting a heads up a little bit earlier. Okay, so really that's what that is. If you set it to no, you're going to get a lot more alerts, but some of them are going to be false because they get reversed or canceled out as the confirmation bar continues to unfold. But if you want to make sure that you only get alerted when the signal has been locked in, then you just go ahead and leave that to its default value of yes. Now we're getting into one of the new advanced features that I've included in this indicator. So I'm going to update the charts so that we have an additional component to use for reference, and that is going to be the RSI and the stochastic, but we're going to treat each one of those separately. So first I'm going to add the RSI to the chart and come back to this setting. Okay, the chart has been updated to include the RSI and the stochastic. However, I've turned them off. I'm going to go ahead and turn on the RSI because we'll focus on that first. Hit apply and OK. And for this example, I'm going to go to a different ticker symbol. I'm going to use Costco for this example. And you can notice all of the different divergence signals here. We've got a bunch of negative divergence signals up here. We got a few positive divergence signals over here. And you can see that there's only one area, one bar actually, that has an oversold condition on the RSI. And so now let me explain this setting. When we turn on this setting, require overbought, oversold, it's going to require that the first swing pivot of the divergence pattern is oversold or overbought. The second one does not have that requirement. Why? Well, just think this through, okay? Because what we're trying to do is find positive divergence in this particular example here. And so the only way you're going to have positive divergence between these 2 points is to have a lower RSI value to begin with and a higher RSI value to end with. And so to require oversold conditions for the second swing pivot of the divergence pattern, but not the first, is sort of, well, it's ludicrous. So this is the only way to do it logically. And so what I want to do is show you how this applies to the chart. You see that there's only one bar on the chart really that is overbought or oversold. We have a lot of different divergence signals on the chart, and what we're expecting to happen when we turn this on, I'm going to turn that on right now. Require overbought, oversold is set to yes. Overbought, oversold type is set to RSI, and the overbought level and oversold level are set to 70 and 30. And if you want to examine the RSI settings themselves, RSI settings are down here. RSI length is 14, set to close, and the Wilder's moving average. All the default settings which are applied on our lower study. Okay, so everything is synced up, all the settings match. We'll hit apply and watch what happens to the chart. There you go. So all of the other divergence signals on the chart have disappeared. The only one that has remained is the one that is oversold at the first pivot for the positive divergence. Okay, and now let's go ahead and take an example for the stochastic, and then after we get done with those, I'll show you how to adjust those settings in the watch list columns as well as the scan, because they're the same settings. So I'll go ahead and edit this, turning off the RSI and turning on the stochastic. Now, these lower subgraphs are plotted here just for demonstration purposes. The code works without these lower studies applied to the chart. They're just here to show you exactly how the settings behave. So let's go ahead and turn off the require overbought, oversold so that we can get an overview of the chart and all of the signals that are appearing without any of the filters. Now you can see where the stochastic full K, which is the red line, not the magenta line, but the red line, whenever it is above 80 or below 20, that is the overbought, oversold condition. And if I just go ahead and move my mouse cursor across each of these divergence patterns, you can see that all of them are overbought or oversold, except for this very last one here at the end. All right, this dark green one, which works out as a double divergence. That is a divergence between the MACD histogram as well as the MACD value line in the same structure. Okay, so when we turn this on and apply the stochastic for the overbought, oversold filter, we expect all of the signals to the left of this line to remain, and only this one that is the double divergence to disappear. Okay, right, so here we have the overbought, oversold. We're going to change that to yes. The overbought, oversold type is going to be changed to stochastic. And remember that the stochastic has an overbought, oversold level of 80 and 20. However, if you have a different preference for overbought, oversold, you may adjust them however you like. And if we go down here and examine the K period, the slowing period, the stochastic average type, these are all default values for the stochastic full. And I want to assure you that on Thinkorswim, the stochastic full includes both the stochastic fast as well as the stochastic slow. So you can use the stochastic full to do either one, and that's why I selected it. Okay, so we've turned on the overbought, oversold filter and applied it to the stochastic. We're going to hit apply and watch what happens to our chart. And just as I explained to you, the double divergence signal over here is the only one on the chart which has been removed because it does not have an oversold condition at its first pivot point. Okay, so now let me go ahead and show you how to update those settings in the custom watch list columns. We'll go ahead and edit the formula. Here you have your require overbought, oversold. You change that to yes or no as needed. If you want to select RSI, the default is RSI. If you want to change that, you can press Control X on your keyboard and Control V and make sure there's a space between the word default and stochastic. So all we did is move the word default, and that will activate the stochastic. I'm just going to undo that. And here you have your overbought and oversold levels exactly in the same location as they appeared in the user interface for the chart strategy. And then you also have your RSI inputs as well as your stochastic inputs. They're all right here available to adjust as needed in the watch list column, and they're also available in the custom scan. I'm going to press cancel here because I don't want to save any of those changes. And let's go ahead and move on to the next setting. Let me go ahead and get the chart set up. Okay, and I've got great news for you guys. We are in the home stretch because most all of the other settings that remain are simply to do with aesthetics, what to show on the chart, and it's really simple. These are going to go pretty quickly. We're done with all of the settings which have an impact on the behavior of the signals themselves, and instead we're going to be looking at settings that will impact what is shown on the chart. And I also will inform you that the settings that are for aesthetic purposes are not included in the settings for the watch list columns or the scans, so we won't need to review any of these settings for those two items either. So show bubbles, yes or no, that is very simple. It just shows you the names of each of the divergence signals. You can see that on the chart now that I've turned that on. So you can see the difference between a histogram negative divergence or a value positive divergence or a double divergence. It's all listed there. And once you get used to the color code, you can see the legend up here that actually shows you the different color codes, and you can adjust those through the global settings. I'm going to show you that. But once you get used to these colors, you really don't need those chart bubbles. So I've got those turned off by default. So I'll go ahead and turn those back off. And then as promised, I'll go ahead and show you where to locate the global colors. Okay, so we'll turn off the orders here, expand the global section. And here is where you go ahead and adjust all of your global colors. So you'll see that all of the divergence colors are there, and they correspond with the colors shown in the legend. And you also have the trend colors there, and they will correspond with the colors for the trend legend. And you can also update the colors of the bubbles right there through the globals setting. Okay, so let's go back here, and the next setting is bubble offset. So let me go ahead and turn that setting back on again, and let's go ahead and adjust that. I'll adjust it down to 2 and watch the bubbles on the chart. You see how they get closer to the price action? So the bubble offset setting is simply there to help you get the bubbles out of the price action so that you can see the candles very clearly, and you can adjust that to whatever value you find useful. So let me go ahead and set everything back to the way it was. Good. And now let's go ahead and look at the next setting, which is show color legend. That's on by default. I'll turn it off so you can see that it turns off the color legend in the upper left corner. So if you want a little bit more screen real estate, or if you have existing chart studies or strategies that also plot labels and you want to save some space and you've gotten used to all the colors for the various types of divergence signals, you can turn off the color legend for the divergence. So I'll go ahead and turn that back on. And then show pivot top bottom, we'll turn that on. I've been talking about swing pivots throughout the video. Let's go ahead and turn it on and take a look at that. So I'll hit OK here, and let's go ahead and examine the chart in a little bit more detail. And you see these little blue squares here, okay? Every time you see a blue square, those are the swing pivots. And let me go ahead and zoom in on this section of the chart here, because we've got a few. There's a swing pivot here, and you can see also there are swing pivots at each of the divergence points. This is the core to the functionality of the entire chart study. What it's doing is it's identifying these swing pivots, and then it's comparing the prices, and it's comparing the values of the underlying divergence indicators such as MACD, RSI, or stochastic, and it's just making a comparison. And then if there is divergence present, whether positive or negative, then it plots a trend line. But these swing pivots are the key to the entire process. So sometimes you'll find it helpful to turn those on in case you're wondering why didn't it pick up a specific divergence pattern, like why didn't it pick up a divergence pattern here, for instance, well, there is no swing pivot identified here. It's not there. According to the way this code identifies a swing high pivot, there's nothing here for it to latch onto. Therefore, there can be no divergence measured from this point to any other point. Same thing here. And I also want to show you that this is impacted by the look back bars. So let's go ahead and try that out. Okay, we're going to go back to a setting that we've already reviewed, the look back bars. And there you go. So now you notice that I changed that from a 15 to an 8. There you go. I changed it from a 15 to an 8. And when I did so, you saw that little blue square pop up right there where there was none before. And you see another blue square pop up right here where there was none before. So the look back setting is actually adjusting where the swing pivots are found on the chart. And that is determining which price structures the code is allowed to use for measuring potential divergence. Turn that back off again. Display trend legend, so we'll turn that to yes. We'll hit apply and OK. And now you can see the swing pivot squares are gone because I turned that off. And you can see that the new labels have shown now for the trend legend, but you don't have any trend displayed on the chart. So let's go ahead and turn that on and show you the different options available for showing the trend. Okay, so we've turned on display trend legend. Now we have another setting called display trend method. So it's off by default. You can select paint bars or you may select average. So let's go ahead and select paint bars. This is my preferred method. I'll hit apply. And you've already seen this earlier. Now I'm going to explain it. You see you have the max bullish is the dark blue, min bullish is light blue, and neutral is yellow, min bearish is magenta, and red is the max bearish. And you can see how the chart rotates from one trend status to another. And what you'll find as the price action is forming a bottom, usually you get a rotation from red to yellow to blue. And as the price action is forming a top, you also see a rotation from blue to yellow to magenta or red. Okay, you see that here too. And when you see the price action oscillating between min bullish and min bearish, that means that the price action is stuck in between a major divergence pattern. So you've got a major divergence pattern above forming resistance, and you've got a major divergence pattern below forming support, and the price action is ping-ponging or oscillating in between those two values. And so it will remain in this mode until it finally breaks through into a new downtrend, and then it changes to dark red, or if it changes back to an uptrend, it will change to a dark blue. And the next setting is going to help to explain this even further. There's lots more to go here. But before we do that, let's go ahead and turn on the other option. So you've got display trend method. Right now it's set to bars, but some people like to be able to see the green and red bars or candles on the chart because that helps them to understand some of the action in the price action and support and resistance levels. So I also have this option for changing it to an average. So display trend method is now set to average. And guess what? We've got these settings here for MA length 1 is set to 21. It's set to an exponential type, and you can also select the type of price. So these three settings right here are going to impact what you see appear on your chart next as I hit apply. You see now the paint bars have been cleared away. You've back to red and green candles just as they were normally there in their natural way. And now those colors are appearing on the moving average. So this is one method that allows you to see the trend status without obscuring the red and green candles that some people will be using for making their trading decisions. Okay, I'll change that back to paint bars. And now we're going to go ahead and open up this other one here called Show Trend Levels. Now this is going to require a bit of an explanation, but I'm not going to go into too much detail. You can play around with this on your own when you buy the indicator and get it loaded on your system. So Show Trend Levels is now set to yes. And I've gone ahead and set display trend method back to paint bars, just to kind of clear up the chart space a little bit. Okay, and now let me go ahead and explain these lines that you see on the chart. And for this explanation, I'm going to try and keep things as simple as possible. Let's go ahead and zoom into this section of the chart right here. You see this green line up at the top, solid line. It's tied into this divergence signal. So until there is another divergence signal of this type, which is negative divergence, that line will remain and continue on. You can see that this divergence signal here created a line that terminated as soon as this line took over. So at each time, watch, we start down here, you can see this divergence signal, the line continues on and extends until the next divergence signal, and it continues on and extends until the next divergence signal, and this one continues on. You see that? You follow my cursor right here, the mouse cursor? Okay, and so that's what it's doing, just like a stair step. As the negative divergences continue to form, that line is continually updated. And likewise, on the way down, when you have a positive divergence, you see the red line, and it goes and terminates here as soon as the next divergence signal is confirmed. Okay, and that positive divergence continues on until the next one forms, and then the line readjusts. And so you can see that by the time you get down here, this price action, all of these candles are within a major support and major resistance levels. And the trend colors are determined based upon this in combination with the swing pivot levels. Okay, so now I'm going to point out the swing pivot levels. You see this swing high pivot right here, and this dashed blue line extends all the way to the right. Well, before that, okay, was another swing high pivot. And let's go ahead and go all the way back to here. You see this swing high pivot here? There's no divergence signal there, but it's just a swing high pivot. And so that line forms and terminates as soon as another swing high pivot forms. And it continues on and extends until there's another. Oh, wait a minute. It skipped this swing high pivot. Why? Because that is a divergence signal. And so that one does not reset that line. That line only tracks the swing high pivots that do not terminate in a divergence pattern. And so you've got the extension continues on here and it continues on here. And so what's happening is that those are support and resistance lines. Once a resistance line is broken to the upside, that confirms a maximum bullish condition. And likewise on the opposite, once a support level is broken to the downside, that confirms a max bearish, but it also requires the price action to fall below one of these major support lines formed when the divergence forms. Okay, so you can see that these pink lines here, it's a pink line here for support from that swing low pivot. Price closed below that, so the trend turned to minimum bearish. It doesn't turn to maximum bearish until the price forms a divergence pattern, positive divergence, which is major support, and then falls through. Okay, so remember back in the beginning when I was talking about broken divergence. Well, here's a broken negative divergence. That's what this is doing, okay? This is the support and resistance lines, and what you have here is the formation of a major resistance level based upon that divergence pattern, and then it gets broken, and that becomes a max bearish signal. So that's it in a nutshell. There's a lot more to it going on under the hood, and I debated whether or not to include these levels with the indicator, but I felt that it was important for you guys to understand exactly what's going on. I'm not creating a black box here. I may obfuscate my code and protect my intellectual property, but I certainly want you guys to understand what's going on under the hood. I mean, I want you to understand, you know, the basic structure and the rules that are being used for these tools that I've created. Okay, and this concludes the settings, at least for the MACD X2, and I am going to show you the RSI and stochastic settings, but that is going to be really quick because everything that you saw here demonstrated for the MACD X2 is included in the RSI and stochastic. The only difference is that the RSI and stochastic uses different elements to measure divergence patterns. So let's go ahead and take a look at RSI stochastic. You can see an example here. And the color legend up here shows stochastic negative divergence, RSI negative divergence, double negative divergence. You can turn on the chart bubbles if you want, and that will also display those signals for you. But all of these settings are exactly the same and operate in the exact same manner. The real difference here is that this one computes divergence patterns based on RSI and stochastic. So here you have your RSI and stochastic settings. Okay. Length, price, and type, and K period, slowing period, and average type. And then you've got all the rest of the settings are exactly as they were on the MACD X2. And then you also have the ability to require overbought, oversold, and you get to select between RSI, stochastic, or both in this case, because the RSI and stochastic are the only two elements on the chart, and you may actually want to use the overbought, oversold type and filter by both, or filter by one or the other. And you can adjust your overbought, oversold levels exactly as you could before. I'm going to turn on the show bubbles just to show you how those show up here. So see, you've got the stochastic positive divergence, you got double positive divergence, you got RSI negative divergence. So that's what those chart bubbles are there to help you get used to those patterns, and the color code will help you to eliminate those bubbles altogether. And as we scroll through the rest of these settings, you can see everything is exactly the same as it was for the MACD X2. As I said, the only difference is the MACD X2 measures divergence based on the MACD elements and uses the RSI and stochastic strictly for overbought, oversold conditions only. And this version here, the RSI and stochastic divergence indicator, will actually use the RSI and the stochastic for determining the divergence patterns as well as filtering for overbought and oversold. Okay, so we're completely done with settings, and I've demonstrated how the settings impact the behavior on each element of the package. Yes, except for the scan. So we're going to do a scan next. You've already seen how to adjust the settings via the custom watch list columns as I went through that section of the video. So we really are not going to plan to adjust any of the settings in the scan. You already know how to do that by watching me adjust them on the watch list columns, but I will run a scan so that you can see the two different signals of the scan. I've got a scan prepared with the two custom columns added to the results section, so we can go ahead and run a couple of scans. And then we're going to show you some more example charts because people are going to be interested to know, does this work with futures? Does this work with Forex? Does this work with tick charts? Does this, all those questions that I'm going to try to answer in the video. And then the final part of the video, we're going to show a live demo, which is really intended to show you how to manually enter and manage your orders as the chart unfolds in a simulated live environment. We're going to use on demand, and we're going to go step by step through the entry, through to the exit, and show you what that looks like and how to manage your orders to match the performance of the chart strategy. Remember, the entire purpose of the live demo is to show you how to replicate in a live environment what the back testing is doing on the chart. All right, so the process is that you perform your back testing, you perform your walk forward analysis, then you start working in a simulated live environment, placing your orders as a live chart unfolds so that you can learn that muscle memory and reinforce that muscle memory, and then move slowly into a live account if and when you feel prepared to do so. And if and when you do move to a live environment, I highly recommend that you start with a very small size because you're going to make mistakes. It's going to happen. right? I mean, a live environment is going to turn up the stress and you're going to fumble even though you've built the muscle memory. So be careful, guys, okay? This is just a tool. It's up to you to learn how to use it. And I encourage you to really build that muscle memory and take the time to learn how to use the tool properly. Okay, so now I'm going to go ahead and show you the scans. And for this scan, I'm going to be using the RSI and stochastic because all the attention has been given to the MACDX2 up until this point in the video. And I want to make sure that you get exposure to the other version of this standard divergence indicator, which uses the RSI and the stochastic. So here's the scan setup. And so for the top level filter, I've got it set to scan in all optionable and intersect with all stocks and exclude all over-the-counter stocks. That will reduce the amount of ticker symbols that the scan has to crunch through and make the scan run a little bit faster. Now, if you're not familiar with how to run custom scans on Thinkorswim, I've got a resource for you, and it's on our website, so I'm going to go ahead and take you there now. So you go to the Hahn-Tech website, and how do you locate this? Well, you go to Free Tutorials, and then you go to Thinkorswim Tutorials. And once you go to Thinkorswim Tutorials, you'll go to the left-hand navigation menu and you'll click on Scans. And from the Scan menu, you will select Thinkorswim Scans Beginner to Advanced. This video also contains a topical index, so you can go straight to topics of interest and not have to watch the entire video straight through. But if you're brand new to Thinkorswim Scans, then I suggest you watch the entire video from start to finish because there's very important things that will help you be much more effective at running scans on your Thinkorswim platform. Okay, so I've got the scan set up for a daily time frame and I've entered the code for the scan using the stochastic RSI. If you look here at the top of the code, you can see the name of the file. So remember when we reviewed the installation and setup instructions, and that list of files. So this is the file that will be used for the scan. Remember that HTS is the prefix and S stands for scans. Okay, so this is the Hahn-Tech Scan Standard Divergence RSI and Stochastic version 4. And it contains all of the same inputs that we were reviewing on the watch list columns. I've also gone ahead and updated the scan results section to include 2 watch list columns that include the RSI stochastic versions of those custom columns. If you scroll down here to the inputs, you can see that we have all of the same settings available here in the scan as were available on the watch list columns. And I already showed you how to adjust all of those settings. And right now we're just going to be using the default settings because we want to keep the video short and just simply show you how to run the scan. There are 2 signals on this scan, and I'll show you how to select between each of those 2 signals. Let's go ahead and examine the code for the 2 watch list columns. I'll go ahead and select Edit Formula and move that over here. And you can see, again, that's the name of the file. All right, HTW stands for watch list. And this is Standard Divergence RSI Stochastic Count, version 4. There's a typo here that I will fix. Sorry about that. And you can see the inputs are right here, just exactly as they appear in the scan. And then the other column is for the trend. There you go. That's the trend file. And again, it's HTW for watch list. All right. And again, you can see all the settings are there just as they were before. All right. Okay, so let's go ahead and run a scan. I've got a chart set up in the background that I'll bring up so that we can review some of the scan results and you can see how the scan results show up on the chart. So let's go ahead and edit the study filter and we'll bring that into view here. And I want to scroll to the very bottom of the scan. The 2 signals that are available for a scan are always going to be listed at the very bottom. They are the last 2 statements at the very bottom of the code. And so here you have one that is active. You can see that right here. That is a plot scan statement, and this is for any negative divergence. Notice the comment line above that. There's a comment line here for positive divergence, any positive divergence. And I'll show you how to activate that scan and switch between these 2. You can only run one of these at a time. If you try to activate both of these scan statements, you will produce an error and you won't be able to run the scan. Okay? And for those who are asking about other features that we might add, right now we really can't do the divergence trend. It doesn't work reliably, so it was omitted. And we can't do the divergence within X bars. That doesn't work reliably either. It sort of overloads the scan engine. So we really can't provide those features in the custom scan at this time. So I've included notes down below here so that you understand that and you don't bother taking the time to ask me, hey, can we add such and such? We can't. Not yet. Maybe someday. We'll see. So we'll just press OK to accept that. We didn't make any changes. We'll go ahead and click the scan button and wait for the results to show up. And then I'll bring the chart over and we can start examining some of the items in the results list. And I did edit the video here because it did take some time for the scan to run. So don't panic if your scan takes, a minute or two to run. That's just the way it is. It's going to take a long time to run this type of a scan. Code is doing an awful lot here, and we are pushing it to its limits. So here's our chart, and I want to show you in the legend in the upper left-hand corner, you can see that we've got this stochastic and RSI chart study loaded on the chart. I'll go ahead and open the Edit Studies window so that you can see which study has been loaded. I'm not using the backtesting chart strategy in this example. I'm using only the chart study, and the reason for that is because the divergence signals are what is being used by the chart strategy to trigger the entries. However, the scan engine itself is not able to run a strategy code. Okay, so the scan itself is not going to be able to pick up the entry signals generated by a chart strategy. We can only pick up the regular signals that are plotted for a regular chart study. Okay, so that's why I've loaded only the chart study here. You can tell by the HTA for analysis, HTA. And I'll go ahead and cancel that because I'm not making any changes. And let's go ahead and move this over a little bit here so we can see the columns. So look at these columns over here. We're going to pick a couple of these, and I want you to notice that the first column that shows the last divergence direction and bar count, everything is set to 1 because the scan is looking at recently completed and confirmed divergence pattern. Okay, so at the end of day on a daily time frame, the scan results are only showing divergence patterns that have been confirmed and locked in. And the second column is showing the trend and the number of consecutive bars for that trend. So that may guide you in organizing your scan results. You can sort by this column here, for instance, and group everything together or sort them by number of bars in a trend. And so let's go ahead and take a look at some of these. We'll look at this one first here. So the scan was running a signal for any negative divergence, and you can tell by the red that this is double negative divergence. So in this particular case, the scan result for ABEV is picking up divergence on both the RSI as well as the stochastic full K. And if you want to turn on the trend bars, we can do that because that will help you to see how custom column 2 is indicating the number of bars for the current trend. So let's go ahead and update our study. And I'll select paint bars for the display trend method. Let's go ahead and turn on the trend legend too, so that you guys can go ahead and follow along maybe a little bit more clearly here. Display trend legend, yes. Okay, apply and okay. So there we go. So the magenta you can see here is minimum bearish, and we've got 14 bars of min bearish showing in column 2. And let's go ahead and take a look at a couple more of these. Okay, AGS. Notice it also has double negative divergence, and it's got 2 bars of yellow, as you can see here. Let's go ahead and take a look at another one. We're not going to look at every one of these. We're just going to spot check a few. So ALG, you can see that that one has got 1 bar of yellow, which is a neutral trend status. And the most recently completed divergence signal is a stochastic negative divergence. All right, let me pick one further down the list here. Let's look at this one here. Okay, so you can see with BKR, we've got 1 bar of neutral trend. And again, it is also a stochastic negative divergence. Let's go ahead and look at one more of these before we go on to the next signal. And here we have BOX down here. It's got 18 bars in the min bullish trend status, and the recent divergence signal was also a stochastic negative divergence. Okay, you're starting to get the flow here. Let's go ahead and update the scan and pick the other signal for the scan. And here's how you change the signal from the one that's active and turn on the other one. And that's all I did was I put a hash mark here and I removed the hash mark here. And that's how you change from one signal to the other. And again, like I said, you can only run one at a time. If you try to run both like this, you'll get an error message. It's impossible to have 2 plot statements in a scan. So that is why it's important that you understand how to activate a specific scan signal when multiple scan signals are included. Okay, so this is for any positive divergence. So we're going to be expecting results in column 1 to be green with a value of 1, and then we'll go ahead and examine some of those scan results. Okay, great. Now we have our scan results for the other side, which is any positive divergence. So let's go ahead and take a look at some of these charts here. And we've got AMED. Notice that the column is showing 2 bars of min bearish, and that's what we have on the chart. And the scan has picked up double positive divergence right there, the dark green arrow. That's double positive divergence according to our legend here at the top. Let's go ahead and look at some of these others. BAX, and so we can look here on the chart, and we can see that there are 2 consecutive bars of minimum bearish status. And on the chart, you might miss it, but this little candle right here switched to min bullish, and then it went back to min bearish. Okay, so custom column 2 is definitely showing the correct value here. Let's go ahead and take a look at a few more of these. We've got another one here. This one is stochastic positive divergence according to the color legend, and we've got several bars of min bearish, and you can see from the custom column over here that that's 15 bars. Let's take a look at one here. Let's take a look at that one, Dave. So look at this. We've got 1, 2, 3, 4 bars of neutral trend status, and we have a stochastic positive divergence that the scan has picked up there, and that corresponds with the columns. Okay, so that's all I needed to show you for custom scans. So we're done with the custom scans. You guys know how to run the 2 different signals. You know how to load the scan into your study filter of your scan. And I showed you guys how to add your custom watch list columns here to your results list. That's pretty simple to do. Just make sure that you keep all of your settings aligned. The settings for the chart study, the scan, and the custom watch list columns all must be the same. If you change a setting in one location, you have to change it in the other 2 locations. Otherwise, you have a misalignment, and you're going to get results that you can't explain. It's going to look like it's not working correctly. All right. So, and another thing that I want to mention, that anytime you have an intraday time frame and you're working with scans on an intraday time frame, you need to do one of 2 things. You either need to make sure that you include extended hours on your chart as well as your scan and custom watch list column, or your chart settings must be set to turn this setting off. Start aggregations at market open. This box must be unchecked in order for any of the tools on Thinkorswim to align with the chart. A simple way to explain that is none of the other tools have this setting. And so for all the other tools, whether it be a watch list column, a study alert, or a scan, they all have this box unchecked because the box doesn't exist. And unfortunately on Thinkorswim, this box is checked by default. So go into your charts, check your settings. It's available here on the equities tab. It's available also on the options tab, as well as futures, and not on the Forex. Okay, so just be aware of that. It's very, very important. I see a lot of people get tripped up because they say, my scan results don't match my chart, it's broken. Well, you got a setting that's wrong, and that's all it is. Okay, so now let's go ahead and review some charts so you can see that this is going to plot on some Forex as well as some futures, and then we're going to try some different chart types. And after that, then we'll go ahead and show you some live demo examples in a simulated live environment. We're going to use on-demand feature, and I'm going to show you some chart strategies as they present signals in a simulated live environment, and then I'll place those orders in a way that you can understand how to replicate the results that you see on the chart strategy. By all means, if you go through all the effort to do all the analysis and the back testing, then when you start moving into simulated trading and live trading, you want to make sure that you understand how to place the orders to make sure that you get the same results that the chart strategy is presenting. Okay, now we're back to a chart strategy as we had examined previously in this video, but this time I'm using the RSI and stochastic version of the chart strategy, and I've got a watch list here that has some Forex symbols in it. So I've linked these on number 9, lilac is how I've linked these two, so I can select items from the watch list and show them on the chart. So all we want to do is take a look at these and make sure that they plot okay, but also to make sure that the custom watch list column is displaying correctly. We've got 11 bars since the last divergence signal, and we've got 3 consecutive bars of min bullish. Let me go ahead and turn on the legend here for the trend. Forgot to do that, sorry. That way you guys can follow along there and make sure you understand what all the different colors mean. And then we got a 4x pair that we can look at here. That's 22 bars since the last divergence signal, and that divergence signal we can tell was a positive divergence because it's green, and that it corresponds with what's on the chart. And you can see that we also have 3 bars of consecutive min bullish. And then we can look at the US dollar, Japanese yen. And keep in mind, this strategy is set up for long entries only. So if you've got a downtrending instrument like the euro US dollar pair, it's obviously not going to make a profit because it's going against the trend. So we can also look at this one here, the US dollar, Canadian dollar, and you can see how the custom column is lining up with what's on the chart there. And also we've got futures here. We've got a Bitcoin futures, and I was really surprised to see this performance. And it looks like the strategy with these minuscule profit targets and stop losses are able to eke out little bits and pieces here and there. I certainly wouldn't suggest that you should expect to always have this type of performance when trading this strategy live. I would recommend that you still do your due diligence and make sure you complete your back testing before you try trading these things. Make sure you get your settings dialed in exactly the way you want them. And again, this is a daily chart, so I don't think many people are going to be trading Bitcoin futures on a daily chart, but it's interesting to look at. Here's a Japanese yen futures, and again, it's a downtrending instrument, so we certainly would not expect a profit here from a long-only strategy. And then let's take a look at some futures. We've got the E-mini S&P, and there's 4 bars of min bullish and 11 bars since our last divergence signal. And we can take a look at the NASDAQ E-mini futures and take a look at bonds. Okay, downtrending again. This is a long-only strategy at the moment. You've got gold here. Surprising to see that it's able to eke out a little bit of profit here despite the chart is chaotic. I don't see any trend on this chart at all. You've got crude oil is here. And let's take a look at some of the indexes. All right, you've got the SPX and the Dow index. You've got the NASDAQ index and the Russell 2000. That's about all I wanted to go through on different instruments. So let's go back to a chart of Apple, and then let's go ahead and experiment with different chart types. Okay, chart styles as they're called. So we go ahead and change this to a Hahn-Tech. It does not change any of the signals. Just so you know, on Thinkorswim, when you adjust your chart to display Hahn-Tech candles, the chart studies you apply to that chart are still using the native data points, open, high, low, close, not the modified data points of the Hahn-Tech candles. If you want a chart study that automatically adjusts to Hahn-Tech candles, that is a custom study, and you can request those. I've built many of those for clients over the years. And now let's go ahead and take a look at a different time frame. Okay, so we've already looked at intraday time frames previously. Let's look at a tick chart. And I don't know if the 1600 tick chart is even appropriate for Apple, but it looks like 1 day worth here of 1600 ticks. And we can broaden that out a little bit so we can see a little bit more detail. And let's try it on a range bar. Why not? I don't even know if it's going to work. So let's do 5 days of, I don't even know what to use for Apple. I'm gonna try 50, and 50 looks pretty reasonable. Yeah, okay, so that's 5 days of 50 tick range bars on Apple. Now, word of caution, and I issue this caution every time that I do a demo video regarding chart strategies, and that is that I highly recommend you avoid using chart strategies with tick charts and range bar charts. You might be able to get away with it on a tick chart, but on a range bar chart, I would not count on those results being replicated in a live environment, because the range bars are dependent on their starting point. Change the starting point and you change the bars. If you really are serious about using it on a range bar, you need to do a lot more research and study to make sure that the signals that are presented on the chart strategy are exactly the same as they play out on a live market, and you got to do the testing for that, and that's up to you to figure that out. I'm recommending that you stick to time-based aggregation periods, 1 minute and up. Okay, so now I'm going to go ahead and set up the charts for the live demo. I'll just give you a quick review here. I've got 4 different panels here so that we can do some testing, and I'm going to activate the on-demand feature. And what I'm going to do is I'm going to use the benefit of hindsight. I'm going to find some profitable trades, and then I'm going to use the on-demand feature to go back in time to the start point of those trades. And I'm going to show you how you should place the orders in a way that replicates what the chart strategy is signaling on the chart. Okay, so this is a very important part that you want to pay attention to. Don't skip this part of the video. Okay, so I've got a chart of Costco loaded. I've got the active trader or trading dome loaded on the right side. I've got it set to trade 100 shares. Auto send has been checked. I have a bracket set up. So I've got a trigger for a limit order for my profit target, and a stop loss order is going to be sent along with the market order. So what I'm waiting for is this bar to close. Right now it's going to be showing broken negative divergence. However, we have to wait until the bar closes because the signal is not locked in until that bar closes. So we got about 4 more minutes before that bar closes. So I'll go ahead and continue editing the video and update you as the trade progresses. Okay, and here we are about 10 seconds or so before that bar closes, and I will warn you ahead of time, the on-demand feature has a lot of bugs. You see that candle action? It updates sporadically, so it's a little bit buggy, but I want to make sure that I go ahead and execute this right at the correct time, regardless of what the chart is showing here. And then I want to update the stop and the limit orders to get it out of the way. The bar is actually closed, and you can see the profit and loss on the active trader. The chart just hasn't updated yet, so I need to give it some time here, some breathing room. Again, as I said, the on-demand feature is a little bit buggy, and it just happens to be Friday afternoon after the markets have closed, and Thinkorswim is doing some maintenance on their system, so things are a little bit less responsive than they normally are. Okay, so it took a little while for the profit target and the stop loss to appear on the chart. During a live market, obviously those will appear immediately, and it's the on-demand feature that is holding us back here by being a bit buggy, as it usually is, but a little bit more so than usual. So here I have adjusted the target. That's the limit order that will sell when it is passed through, when the price passes through that level, and I've placed it at approximately 491.25. You can hover over that order and it will tell you I'm at 491.27, so I'm a little bit high, a couple ticks. And then the stop loss order is down here. It should be at 481.53. You can hover over that, and I've got it at about 481.55. So now we've got a couple of bars that need to play out before this target gets hit. I know that by hindsight because I looked this up beforehand, and I will update the chart as the trade progresses. Just a quick update, the chart has added another bar, and it's the next bar after this that actually hits the target. Okay, and we got a couple of more minutes before this bar closes, and we may see the target get hit and take us out of the trade before the chart actually updates. So we may have to look at the active trader to get the true view on where the price is. 489.31 is the high so far, and the order is 491. There's our order right there, and we got a couple of minutes here before this bar closes, and then the next bar is the one that hits. So we're just a few minutes away. I'm going to update you as the trade progresses. Okay, so the time on the on-demand clock shows that it is 9:45, so the bar that exits the trade has actually opened, and there we go, taking us out of the trade. Now unfortunately, the chart is not updated yet, but you can see the active trader is still functioning correctly and took us out of the trade. You can see it traded up as high as 491.74 so far, and that was above where we had our target order placed. And I'll wait for the chart to catch up, and then I'll go ahead and bring you back and show you how it ended up on the chart. I'm sorry guys, this is the way on demand is. It's just kind of buggy, and we just have to live with that, as this is the best we can do for giving you a simulated live trading environment. And you can see the chart is finally catching up with reality, and there it goes. So that's what happened a few minutes ago on the active trader in real time, and then the chart just took some time to update. You can see how erratic this price is. That's all the volume data coming in late, and so the chart is updating much later than the active trader window. And so at least the active trader window is working correctly and took us out at our target. And so I hope that wasn't too muddy for you. I hope that was clear enough that you understand that for the divergence entries, you have to wait till the bar closes before you place your entry, and you have to wait until the strategy plots the signal, whether it's broken negative divergence or a value negative divergence or a histogram negative divergence or something else, then you want to go ahead and place your bracket orders. Okay, you limit at the target and your stop loss at the stop loss level, and then wait for the trade to play out. And I hope that helps you understand how to place your orders in a live environment in a way that matches the way the chart strategy is reporting the profit and loss on the reports. Okay guys, and that's all I've got for you. I just wanted to close the video with this list of questions. This is the list of questions I gave you at the beginning, and I suggested that you keep these questions in mind while you're viewing the video. For those who are trying to evaluate whether or not this is the right indicator package for them, then here are the questions again for review. I'll let you go ahead and review those. I'm ready to sign off, so I think we've run out of film for the day. It's time to close up shop. Thanks a lot for watching, guys. I hope that you find this indicator package helpful, and I hope that it helps you to be more proficient and more consistent with the way that you go about identifying your own trading setups, refining your own edges, and optimizing your trading methodologies. Thanks for watching, everyone. Take care.